Good morning, everybody. It's Chris here from Student Education with the Forex Majors analysis update for the 18th of November, Friday the 18th. Let's have a look and see what's been happening. First of all, euro against US dollar. Let's have a look at the daily. Wow, yesterday a lot of trading range, a lot of momentum. However, very indecisive. Price trading at the low end of the wick, closing on a very bearish signal here. But this was happened before. We've seen price action, previous candle pretty much moving higher. If that's the case, we see price hitting a lot higher and engulfing the previous candle. It could very well be the start of a bullish morning star formation. Ideally, we'd like to see price trading above the 135500. That will take out the previous swing or support we saw just recently in early November. But also that'll be a price support and resistance going back some to the early parts of September of this year. So price moving higher after a very indecisive day yesterday. And what we need to see, if this is to be a bullish signal, we want to see price trading at least above 1355. Closing higher than that would definitely give us an idea that bullish momentum is now creeping in, and we should see further extensions to the upside. I'm just going to draw some lines in here quickly. Okay, there we go. As you stand, you can see I've taken some fib projections from the highs and lows, or recent lows to highs, and a recent high to a low period, and these are giving these extensions over here on the fib retracement level. You can see quite clearly that we have a consolidation of some of those fib lines at certain areas, and those all relatively are in the same sense price support and resistance levels. Quite clearly we had a very strong support level through there at 13700. Noticeable one up here at 1385, between the 1385 and the 13900, where we saw price pretty much going sideways for almost a full week. We have another one up here at 1400, which we know is a very psychological long-term support and resistance level at 1400. And the one we really want you to be aware of is the one that's close to the price at the moment, 1355 to 13700. There is a noticeable two levels of fib congestion at that level, and it happens to be price support and resistance on two fronts. So price has to remain below that to see any further indications lower. Price has to be trading above that to see any idea of potentially 13700 being back on the target for the next couple of weeks or so. So very, very interesting. We are going into the last day of the week. Are we going to see some traders closing their positions as we go into it? We've had a lot of momentum through the last couple of days leading into yesterday's indecision and to this morning's decision candle. Have a look and see if there's anything on the fundamental side to see if we're going to see any pushes later or during this morning session. We did have some favorable news on the German market. German PPI month-on-month figures were up 0.1%. The forecast was the previous figure was 0.3. They were forecasting 0.1 and it came in at 0.2, so slightly higher than the actual forecast. But have a look and see if there's any other news out there relating to Eurozone, in particular Italy, and see if there's anything out there that could really throw a span in the works or help with the momentum to the upside that we're seeing this morning. Okay. Next up is sterling. Here again, price action yesterday, trading at the low end of the wick. After 3 consecutive days of downside movement, that's taking us back to price support and resistance level not too long ago at 1570, 700, and we've seen a bounce, a corrective bounce. Here again, as per its euro counterpart, we want to see the previous candle here been taken out, so a bullish engulfing of euro would definitely give us a reason to look for potentially a pullback of some sort. But as we stand now, let's have a look and see where these levels are. So if I take the high just recently to the low, we've seen down here in October, and we do some fib retracement areas, the same over here. Take the low to the previous high here just before November. You can quite clearly see that price is now in the area where we're seeing price testing a price fib retracement area here, 38.2 fib, which takes us to just shy of the 1582.600 mark. And we have another one just below us here. So ideally, if prices remain bearish, we want to see price pulling back and closing at least below this 15800 mark going into the close of the session. Or if it remains to the upside like this, then we could see price pretty much pushing higher and if that engulfs the previous candle, then we could see price breaking this 32.8, which will give us an idea that we should be looking for high extensions and ultimately looking for potentially 50.9500 as a potential target long term going into the new week. We drop down into our 30-minute chart. You can see quite clearly that price is now testing the institution moving average and also the top end of this channel. We've got some support here and notice to be some resistance on the top here, and our RSI is well over, going into well over bought territory here at the 70. So are we going to see a correction? Ideally we want to see price pulling back, and as it can stay below the 15,800, then ultimately we're going to be looking at potential further downside movement. If we can find support above this price support and resistance here, then we could see a support at 15,800 and then a bounce back up to 15,8500 during the course of this morning, or today in particular. Just be aware that the institution moving average is pretty much still on top of us in favor of further downside. We move to our hourly chart. Here you can quite clearly see that we have those two bandwidths I mentioned earlier, the one just below the 15,800 and the one just above it. Is that going to be our resistance level? You can see quite clearly that price failed to really materialize on two occasions before breaking above that. And it's the same over here, for example. A lot of congestion over here between these two moving averages. So are we going to see the same thing happen over here? Price is pretty much testing those levels as we speak. Also the underside of this trend line, and we are in a consolidation upside move, and the RSI has been gaining strength through this period. Are we going to see price fading at 15,800 and pulling back? If it closes above 15,800 quite solidly, then we could see that potential pullback and then a continuation higher to at least 15,8500 will be on the cards today. Here is Swiss franc next. Let's have a look. Yes, we've seen a slight pullback yesterday, as I mentioned, as price has been heading higher to that all-important 930 mark prior resistance. We've seen price really starting to slow down. You can see the momentum. These candles are getting really smaller and smaller and smaller, and sure enough, over the Asian session last night, we've seen price putting really engulfing the whole of yesterday's candle already just on the Asian session. So what does it leave us with? Well, if you look at a pullback from the highs over here to the low, ideally we could potentially be looking at this level here at 910, or potentially back to price support resistance around the 9.5. But 910, 9.5 mark will definitely be back in our radar again if this pullback is quite significant. I'll draw another one to the top here. Yeah, there's nothing really in its way to pretty much get in its way on these bigger time frames. You might potentially take a target here from the bounce high, the support trajectory to the upside. So if you took the highs, for example, that bounce, this bullish engulfing candle here, to the high that we're seeing, you can see the 23.6% mark is in favor. Now, if that fails to stack up, then ultimately 38.2. and the 50% will take us back to price support and resistance here at the 910. So as it stands now, 910 is going to be our potential pullback target long term intraday if it continues to maintain this way. Ideally we could put the 23.6 in and the 38.2. So now as we move into an hourly chart, what we should do is see those support and resistance levels at those particular areas, and that will help us on our intraday. Okay, you can see that the RSI in particular, as we've been heading higher, as price has been pretty much stagnant across the past couple of days, RSI has been dropping quite noticeably. These highs getting smaller and smaller, and we're getting divergence on price action. So it indicates a slowdown as we've been heading higher, and that's just confirming it because we've seen prices pretty much consolidating in this trading range, just going sideways. As it speaks now, the price is testing the underside of the 23.6. If that's the case and we see price failing to actually break higher, then we could see potentially the next 30 minutes, if it closes lower than this 23.6, we could see there's a resistance, and then we should see extension lower, and ultimately 38.2 would take us back to 913 would be our intraday time frame. First target. Second target will take us back to price support and resistance at the 9110. At 9110, and psychologically also, well, not psychologically, but also the 200 period institution moving average. So as it stands now, if we don't see price finding support at the current area, 100% of that initial target has been targeted. Break below 916, a close below 916 would definitely confirm that we should be looking back down here at 913 as our first potential target for this. If it breaks higher again and manages to close higher, then we could see you've seen price over here pretty much finding a tentative support, and hopefully we can see it build on that to have another reattempt. But as it stands now, relative strength is below the 50% line. You can see as we've been bullish, price has been spending more time above 50. Now as we go into this bearish consolidation, or this consolidation to the upside, you can see price action is pretty much more below 50 at the moment now, and as long as it stands to be the same, then we could see price pretty much finding resistance at this level, and ultimately our target at 38.2 down here would be back on. Last pair of the day is the US dollar Japanese yen. Let's have a look. You can see price is still falling. That 61.8 not really helping as a potential support area, and we are pretty much looking for the US dollar Japanese yen to continue to fall. You can notice here price trading over the past couple of days very tentatively on the underside of 61.8, and this morning on the Asian session pretty much kicking off to the downside. And you can see the actual trend direction on the daily pretty much smack bang in favor of further shorting opportunities. Clear resistance above as price has fallen. Noticeable resistance over the past couple of days at the underside of 61.8, and now we should be looking for further extensions to the downside because of that. So as it stands now, you can see that we're seeing a resistance being found at 7,700, and we're seeing price this morning actually falling lower intraday. So there we go. This is an hourly chart of the US dollar Japanese yen. You can see the intervention, and then ever since then nothing really stacking up, and we're trading above one Fibonacci retracement area, breaking down to the following one, trading along that, breaking down to the next one. So the beautiful this is a beautiful indication of potential trades, breakouts, and quite clearly here at 7,700, you know, the last one here at 61.8, you can see that ceiling level, noticeable ceiling level there as price is failing to break above it. And sure enough, this morning on the Asian session we've seen price just pretty much giving up after 1, 2, 3, 4 attempts of those of prior resistance here at 61.8, and we've seen it fall lower. So where to for this price? Well, there could be one or two things. Trend direction pretty much still favoring downside, so make sure you put your trend lines in so you can see where price action is moving to. And then do we have an all-time high and a projection? So we had this normal break and then followed by this consolidation. We could potentially be looking at that as a potential start, so we could look at that as the initial first move, followed by this consolidation here. I don't know if we can go for the highs. There we go. So ultimately 100% would take us back down to 76.20, which would bring back down to prior resistance here at 76.20. So 100% extension of that move here likely could be back down to 76.20 long term. Ultimately a break below that would take us way back down here to the breakouts of the high 161.8, which would be 75.60. That's it, guys. Hope you have a fantastic trading day today. Please ensure if you are following the rules of the CTC that you follow them systematically. You can see sterling or Japanese yen still very much in a bearish sentiment here on an hourly chart. We have seen consolidation, a lot of blue in here, but still red on the other side. So you got to just be patient, and sure enough, those of you who'd actually seen this break of resistance last night would have been able to capitalize on the Asian session. We are still trading lower as it stands now. If price fails to break above 76.75 on the next hourly candle, then we're finding resistance here, and then potentially 61.8 at 76.63 would be our next target. Failure to find support there would be 76.20 as our potential long-term target, and then 161.8 way down here at prior resistance and support when before we saw the intervention being on our long-term target at 75.60. That's it, guys. Hope you have a fantastic trading day today. It's the end of the week. See if there's any news. We might see a bit of slowdown in the market today. We might not. We've seen a lot of movement this morning on the four majors. That could potentially go through to the US session. But other than that, have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.